Hello traders, today is the 10th of June. My name is Hornsey. I'm a market analyst trading, and today I'll be looking at trends in the Forex market. Okay, we're going to start with the YouTrading.com Forex heat map. The yen, Swiss franc, the Aussie, and the New Zealand dollar are all doing well today. The US dollar is weak, but the pound is the weakest, closely followed by the CAD and then the Chinese yuan. So completely mixed today, no real risk on, risk off. So we're not expecting equities or commodities to go in one direction. If we go to the economic calendar, we can see that Chinese inflation data this morning came in as previous reading, but slightly lower than the expectation. So that's good. Month over month came in slightly higher than expectations, but a lot lower than the previous reading. So again, good. Chinese PPI came in lower than previous, but as expected. Looking down, the sort of main focus today will be the US CPI. We are expecting no change in the year-over-year non-seasonally adjusted reading for May. However, we have got President Biden speaking later today on this inflation data. So if it comes in as expected, then that's good. If it comes in better than expected, that's all down to him. If it comes in worse than expected, that will be because of the problems in Russia and the Chinese lockdowns. We also have ECB Lagarde speaking today, no text or pre-recorded. So essentially she's going to be talking, and I doubt she's going to say much more than what she said yesterday. So probably no real change there. But yeah, today's focus is all about inflation. We go to the active trader platform. Start with Australian dollar versus the yen. Had been an impulsive move to the upside, swept the high from 19th, 20th of April. We then found the low on the 8th of June, acting as sort of support at this old resistance. We broke through it yesterday, and today is a continuation of that move. Like I said, the yen is stronger today. If we look to the 95.7, then that is going to act as resistance. If we test it and then close back below the 9-period moving average, that would then signal, a possible move right down to the 91 level, back to where we broke out on the 30th of May. So, possibly if the yen was to continue appreciating, there is room in this Aussie yen for a big pullback. However, if we get back above that swing high, then it's off to the races, and there's no sort of real reason to sort of not expect, a bigger move. If we pull out, we're looking to the left here, 10th of May, looking for the 97 sort of level, swing high here before a bigger move up to the 99.8. Aussie dollar, looking for the dollar to obviously appreciate today. Australian dollar versus US dollar has been going in a sort of down sort of trend. We did have this range here from the back end of 2021 into the middle of March. We sort of broke higher, took out the liquidity from October 21, went lower, took out this double bottom, back into the middle of the range, back up to the 200-period moving average. Now waiting to see which way the dollar goes to sort of basically move the Australian dollar and all the rest of the commodities. Euro CAD, that's been going lower. We've now got this triple bottom here, looking to see if we can break below that. Obviously, we had a sort of signal to go short after the setup on 24th of May. We had the signal around the sort of 31st of May to go short. We have pulled back into that level, so looking to see whether or not there's a deeper retracement, or whether or not the euro goes a lot lower, taking out this triple bottom. Euro versus the Aussie generally goes opposite to the Australian dollar versus US dollar. Obviously, euro has been weaker based on the inflation outlook and the sort of lack of sort of emergency sort of rate hikes. They're looking to see if they're going to take it steady. We've got this double bottom here on the euro versus the Aussie, so I am looking for this old support to act as resistance now, and for the price action to come back below 1.475, and then possibly take out the 1.45 sort of swing lows. Euro versus the pound going sideways. Nothing really to sort of say about that. Euro versus the yen. Again, the yen strengthening today, looking for a pullback into this impulsive move. Working its way back to 140 seems reasonable. Maybe even down to 136.5 if we are to sort of undo all of this sort of exponential move higher. It's basically to try and find out where the support really lies. Euro versus New Zealand dollar. No trade as such to talk about there. Euro versus the US dollar, we're in a short now. Where my stop loss is and my entry, we had a sort of 50% move of that range yesterday. So I took half the profits off. So I moved down from being short by 0.1 lots. I'm now short 0.05 lots. I took some profit. So basically, if price action was to go all the way through my entry back up to the stop loss, I'd be out for a scratch trade. So, no loss, just a waste of time, really. However, that means I can now relax. I can look forward to a bigger move to the downside, maybe take profit around the swing low here. But it also means I've got like 0.05 lots to sort of put to work if we do find another currency pair setting up. Pound versus Aussie, basically going sideways. We do have this double bottom here from this steady low from the 5th of May and also the 5th of April. So month apart, lots of liquidity down there, looking for a move back below 1.72 and then sweep this low here. Pound versus the yen, obviously the yen pairs are all going to be the same, looking for this exponential move to be sort of backfilled. Lots of places where resistance before could become support, but we could be all the way back down to 160 if we are to see a stronger yen. Looking at cable, obviously it'd be nice to be short the cable. Euro versus US dollar would have sort of led the way, but at the moment we're just in this range. We didn't have a setup. We haven't had a signal to go short, so just waiting on that. The Kiwi, New Zealand dollar versus US dollar, looking obviously, like I said, with the Aussie US dollar, looking to see what the Dixie does. If that goes higher based on inflation data and expectations of rate hikes and things like that, then the Kiwi goes lower. If we get lower inflation and then maybe a bit of uncertainty of whether or not the Fed's really going to go for the 50 basis points or possible 75 basis point rate hike in the future, then the US dollar might come down, which gives the Kiwi and all the other commodity pairs room to go higher. We do have this 0.656 sort of level, used to be support, then acted as resistance a few times, lots of liquidity above there. And we've got the low here from the 20th of April, and that coincides with the 200-period moving average as a possible next target to the upside. Dollar CAD came back down. This is the kind of deep retracement I talk about. We had this high here from 1.258. We had the sort of big sort of bearish candle here on the 20th of April, which then got reversed. So lots of traders were selling into this as more traders were actually buying into it. Obviously, the result is buyers overwhelmed the sellers. We had the big move up, took out lots of swing highs, lots of significant levels to the upside, big retracement. So big up, big down, possible big sideways. However, after what happened yesterday, dollar versus the CAD, if inflation comes lower because energy is going to come lower, then we are expecting to see another rise in this dollar versus the CAD. See if we can take out the sort of highs here at 1.3 to 07, 1.31, all the way up then through the 1.33s, possibly up to the 1.37. That is a very good sort of target based on where we are now. Unfortunately, the strategy we're following is not sort of showing a setup yet. Dollar versus the yen, lots of that is based on what happened in the 10-year yields. They've been rising. Dollar versus US dollar, the dollar versus the yen, has been pushing up along with the yields. If we get lower yields, then the dollar versus the yen comes down. That drags the rest of the yen crosshairs lower too, like we've been talking about. Or if we get higher inflation, higher interest rate expectations, higher yields, then dollar versus the yen breaks through this 135 and then carries on going as we've talked about before. So if looking on the weekly chart, this swing high from 10th of February 2002 is still a target. We just need to know what the inflation is doing in the US today. And then if we get through that, we've got a big move up all the way up to the 141. So that's the Forex market. I just want to talk quickly about S&P 500. Now, on a weekly chart, we had this swing low form on the 15th of May. Nothing special about that. We had this sort of bear market rally, came up to the 9-period moving average, found resistance. Looking to the left, that's sort of confluent with the sort of lows that we saw back here in March. Going to the daily chart, things look a bit more interesting. We had sort of low, a lower low, a high, and then a higher high. Obviously, this candle here from the 27th of May, that sort of changed the sort of direction of the bias, if you like. Market structure was broken here from the 17th, 18th of May. We've now consolidated. So we had an impulsive move, then we had some sort of consolidation, and then yesterday we had a big breakdown. Now the breakdown itself didn't get much well, it got into the sort of middle of the range. If we were to pull up a fib from the low to the high, we came down. Now, as of today, we're sort of just coming towards the halfway sort of mark. That's obviously a good target to look for long. But if we look here, we've got the 25th of May, we had the high there, and then we had the 27th of May low. So as this impulsive move was going higher, they left, it's like an imbalance. Here is the balance area. This is the most sort of obvious imbalance on the daily chart. So if we were to come back and test the 25th of May high today based on the US CPI and then go higher, I think we are actually going to sort of finally take out the liquidity above 4,300 just to sort of go and tag the sort of daily 200 EMA. That's what I'm looking for today on the S&P 500. Obviously, if we break through this, get through all these lows, then there's no sort of trade to take. We didn't have a setup or a signal to go lower. I'm just waiting for this sort of consolidation period to work its way out and then see if we can start an impulsive move to the upside, really. All right, that's the Forex and the S&P 500 sort of trends that I'm seeing. I would recommend waiting until after the inflation data today and then reassess everything when the market close, see where the trends are sort of pointing towards, see if you can find some decent targets, and then wait for the setup and trigger on this strategy. All right, good luck today, and I'll speak to you again on Monday.